timeline. But let's focus on the metal space now. We have the news of a possible merger between Vedanta and Cairn, which we have to deal with, as well as the news on Tata Steel, which Nigel would know better of. But we have Chintan Mehta of Sunidhi Securities to join in to talk about all of that. Chintan, hi. Thanks very much for joining in. Cairn is the top loser on the Nifty today. How are you reading the likely news of a possible merger between Cairn as well as Vedanta?
See, this was very much on the cards, going with what Vedanta's history was concerned, this kind of merger was always on the cards given the kind of cash balances with, Cairn was concerned. So, and previously also we have seen Sesa Goa getting merged because of its surplus cash balances. So, so this was very much in line, and the future course of action would be, acquiring government stake of Hindustan Zinc and eventually even that being merged with Vedanta over the longer period of time.
All right, Chintan, thanks so much for joining in this morning. But will you view this as a positive for Vedanta, given that now they have that access to Cairn India, if in fact this goes through?
Definitely, see, 17 to 20,000 crores is lying cash in Cairn, but that can get deployed for Vedanta's, but the only concern is that whether this cash will be again, used for repayment of debt or any other kind of acquisitions. That yet need to be seen. Given the company's history of acquisitions, that's always been of a problem area. So, besides that, it's a overall positive for Vedanta.
Okay. Chintan, if you had, certain reservations about this merger, what would they be?
See, considering the Cairn's cash, the dividend payout in this Cairn has been always been on a lower side, as well as we are in a previous past where we've seen, the kind of loans and advances being given to the group companies. That's always been a concern with the cash companies of Vedanta's. So, so given that, now the whole conglomerate business comes into the picture, that Vedanta will consist of iron ore, aluminium, oil, zinc, all of mix. So that, becomes a bit of concern for Cairn investors, because where it was a pure oil play, actually, now it will be a conglomerate business and the multiples will be derived accordingly.
All right, Chintan, then let's shift focus a little away from something that is less complicating. Let's talk about Tata Steel. Tata Steel opened up low by close to 2.5%, 3% odd. This has been in the news with regard to that strike coming through, but now we believe come June 22nd, there is a possible strike that's in the offing. How are you reading this news in terms of shutting down of the operations? What value do you give to their UK operations? And do you believe the stock, after a big 20-25% correction from the top just in the last 3 months, do you think it's factored this in, or do you think there's more pain?
Two things to it, Nigel. The first thing is that, what could be the potential savings if this pension scheme's, requirement goes to. The pension plan is running on a deficit of £2 billion, what, we're estimating. Yeah. And, by this shifting from, British pension scheme to the money purchase pension scheme, they might eventually save around £1 billion. So that was the kind of savings we're talking about. But see, the other aspect is that if suppose the deal doesn't go through and Tata Steel resorts back to this British pension scheme, eventually the liability would have been earlier. It would have been 5 years, 8 years down the line. So the immediate impacts were not to be seen in 17 or 18 or 19 earnings. So that has to be taken into account. And if the second possibility where a strike goes through, immediate impact would be that they have some inventory to liquidate, and so it's really difficult to evaluate how much the strike goes on. But they will eventually lose out 10 million ton per annum. So that's a bit of a concern, because the companies are running on EBITDA, which is not even recovering depreciation and interest cost.
Right.
So that definitely means it won't be a rocket science to evaluate that. It will be damned to its earning, actually.
Okay. What is the fixed cost that the UK operations incur? And possibly on a monthly basis or maybe on a daily basis?
Daily basis would be difficult to calculate. Still, we estimated around $600 million what the company has a fixed cost in terms of its depreciation interest is concerned. So that will be a bit difficult to recover at this point of time.
And when would you start changing your estimates based on how long the strike could go on for? We don't know that now, but when would it start becoming a concern for you in terms of your numbers?
See, what we understand is the company will be running out around 1.5 to 2 million kind of inventory. So that could, given that run rate, 2 months inventory the company might be having at this point of time. So anything beyond a month and a half kind of logjam, will definitely we start getting earnings downgrade from that aspect as well.
All right, Chintan, thanks so much for joining and giving us all those details. Ekta, just